Hello, everyone. We all need no introduction, so we can save a bit of time. I wish I heard Gordon Watson saying, I think Gordon's gone. He said it takes a lot of courage for the IA to organize an event like this. Had I heard that before, I wouldn't have put my session at the last. But then we were having this hope that by the time when you have suffered so much in the morning, we guess that a lot of you would have gone. But I'm a bit disappointed. So anyway, this tells me two things. Either you guys are very happy that you don't want to go, or you are so grumpy that you have a lot in store for us. Anyway, either way, we're going to make it pay for you. We all know as regulators there are a lot of interactions, but we don't actually anticipate such an open attack from the entire industry. So if KP is gone, my reply to KP is that I don't think any regulator in Hong Kong would dare to do this. But since the chairman has told us that we're going to do this every year, I don't think I have much choice. Anyway, now, as a moderator, I don't need to take questions, you see. So I can say whatever I want, and that's the beauty of it. But I just, if you allow me, in the Q&A session, I would chip in whenever I could, just to make sure you can take away from this session some ideas about what we want to achieve together in the next year or so. Anyway, we will start with a little bit of information from each of our executive directors about the issues and the challenges that they face, and the kind of work they are doing with the industry. Now, I will start with Carol, because Carol is interesting because, in case you're not aware, Carol is interesting by herself, but Carol's role is interesting because our ordinance, as you know, in the old days, OCI is only focused in one thing, and it does very well, which is prudential regulation to maintain market stability. But if you read into our insurance ordinance closely, as Professor Kawai has just mentioned, we have two other aspects of duties, which is to educate the public, and the other one is actually to promote our competitiveness. Now, Carol's schedule is interesting because in a way that she is focused mainly still on prudential regulation. So she is the person in particular whose sole mission, I think, is to maintain the market stability. But yet, the interesting area is that even her schedule, she's going to tell you there are a lot of changes which she is pursuing to try to improve the market structure, bring in technology as a positive disruption, and try to develop some niche for Hong Kong, not just here, but also internationally and regionally. So I'll let Carol start.
So we have the benefits of being the last panel, and I have the benefit of being the first panelist to speak in the last panel. So do bear with me. I mean, I'm going to do some promotion. You know, Chairman, I'm tasked with the job of promote the industry. So bear with me. I want to promote what we have done, you know, in the past 18 months. Those new initiatives for the IA to promote the industry. And what I'm going to say is, with the additional role to facilitate the sustainable growth of the insurance industry, and also to promote the competitiveness, in particular in the international insurance market. I mean, riding on the, Clement just mentioned about riding on the inherited wisdom of the then Office of the Commissioner of Insurance, we have embarked on a number of initiatives. So allow me here to just briefly mention to you about 3 initiatives. They are the additional role of the IA as the group-wide supervisors, the tax incentives for deferred annuity and also the voluntary health insurance scheme, as well as InsurTech. You mentioned a lot about InsurTech. To promote, I mean, the Hong Kong as the international insurance center. If you may know, the Hong Kong IA Insurance Authority is now the group-wide supervisors of 2 insurance groups, you know, those panelists that sit here in the third panel. And also we are going to have one more to come by the end of next year or early 2020. So what does that mean of Hong Kong being the group-wide supervisors? Jonathan is here, right? Yes. This morning we heard about Jonathan of the IAIS, International Association of Insurance Supervisors, emphasizing the important obligations to the group-wide supervisors in the last IAIS annual conference, that the future group-wide supervisors will be responsible to assess the confidential reporting from the group in respect basing on the future International Capital Standard version 2.1, and to have those analysis and discussions with the involved supervisors. Needless to say, the additional role in the crisis management group, and also the preparation of the resolution and recovery plans. So, with all these additional responsibilities, the IA, we are now modernizing our group-wide supervision overall regime, as well as the legislation, in order to be in alignment with the evolving international standards. You know, even the international standards are evolving. So on top of that, we are also boosting our dedicated team with the international talents, so that we have the right range of the skill sets. This morning we talked about step up participation of the IA in the IAIS, the 2 seats in the executive committee. And in fact, we are, I mean, both Stephen and I, we participate in the market conduct working group, as well as the insurance group working group, actively to share our experience. So that's, lastly, I have to say, echo with Yoshi about the Asian voice. In fact, that is my dream, if you may allow me to say. A few years ago, I discussed with Yoshi, if ever, I mean, Hong Kong can sort of coordinate all our Asian regulators to have our Asian voice to be heard in the international forum, that will be very, I mean, excellent. So at last, I mean, this comes true. So we have the AFIR forum, and then we hope our Asian voice can be heard. So that's for the international forum. Back to Hong Kong. Our insurance sector has experienced favorable growth in the past years. However, the emerging risk posed by the demographic changes, as well as the longevity, has not been well addressed. This morning we talked about this protection gap. So the government, together with the IA, has been working on to grant tax concession on the deferred annuity, as well as the what we call the VHIS, Voluntary Health Insurance Scheme. We want to encourage the insurance public to buy insurance at their early stage, to plan for their retirement using annuity, so that they can provide them with a stable stream of income. So with that, we are now, the IA has been working on the guideline, which will set out the eligible criteria for those who want the tax concession when they sell the deferred annuity products. We are also working extensively on the legislation with a view that these deferred tax deduction on deferred annuity will come into play commencing the assessment year 1st April next year. As to the VHIS, again, the government also provide tax concession. That VHIS, in fact, is they are embedded with the enhanced features of this standardized condition terms, renewal, and unlimited benefit period. All this, we hope to encourage the insurance public to use insurance coverage to settle their private healthcare bills, so as to alleviate, the pressure on the public healthcare system. I have talked about these tax initiatives about, encouraging our insurance public to take out more protection type products. But in fact, we talk about a lot about the space of insurtech is already changing, or we call it reshaping our market landscape. Riding on the technology neutral principle, we set to ensure that you mentioned about this proportionate regulation just now, that we set to ensure that there will not be any unintended regulatory barriers for insurtech, but we will ensure that those products that was being sold on the digital channel has to carry simple structure, heavy protection element, so as to maintain the protection to our policyholders and to ensure our customers is being treated fairly. And based on that, riding on that note, we have introduced these two initiatives. You have definitely heard about it: the Sandbox and the Fast Track. Sandbox is for the existing insurers. They have to test out the new ideas under controlled environment with the exit strategy. And the Fast Track is to provide a dedicated queue for the technology startups to market their products on the digital-only platform. And with pleasure and honor, I hereby announce that we have already given the approval in principle to the first life insurer under our Fast Track. So what does that mean? That the newcomer will be in operation early next year, and consumers can now take out their life insurance protection used on the internet or using their mobile phone. We hope that with these newcomers, they will have to fill the protection gap. What does that mean? You are probably aware of these newcomers. They are targeting our millennium younger generation who like to take out whatever financial products or insurance on the net. At the same time, they are selling these simple protection products, which our traditional channel are not interested to sell because of the relatively low commission. So we believe that with clear vision and the regulatory steer, the insurtech can lead to enhanced inclusiveness, greater clientele base, better customer journey, and also the wider risk sharing because of the big data, and ultimately lesser burden to the society. So so that's, as you can see, that's what we have done. At least within my career in the past 18 months, and all this enormous market development already promises us to 2019 continue to be another productive and hectic years ahead. So thank you. I hope I'm not overrun.
Carol has a very mature portfolio. Her penetration rate is high. The insurance penetration is high, but that doesn't mean that we are content and we are not complacent. Certainly, in terms of bringing in new business, we will work on our niche because we already have 3 companies based in here under group-wide supervision. We will try to leverage on that to try to gain more traction and try to play a bigger role in helping the formulation of international standard for this purpose, and thereby attracting more insurance companies to come over here as the base for regional expansion. At the same time, encouraging Hong Kong players to go out from Hong Kong as an operating base into the rest of Asia. So this is where new business could be generated even with a mature portfolio. And the other issue is really about structure. We want the insurance to be directed towards protection rather than savings and investments, which is, again, something which is highly manifested in the type of products that we have in Hong Kong. And this, in turn, will help us to cope with some emerging social risks in Hong Kong. And it will also potentially enhance the inclusiveness so that more people will realize what insurance can do for them. And InsurTech basically is a supporting tool because it will reach out to more people, make it easier for people to understand before they buy, and it will reach out to the younger population. So all these three, in fact, are mutually reinforcing, and that's Carol's portfolio. Well, let me pass to Simon then, because Simon, interesting. Again, Simon is also interesting because he has a portfolio, as Winnie pointed out, which has a very different operational circumstances, highly competitive, lapsing between profit and losses. But his issue is not just about prudential regulation. Because of the fact that this particular sector has a very stagnant business, his job is also to try to gain more opportunities for the industry. Simon, please.
First of all, on the prudential supervision side, when the IA took office, the risks are not emerging already as fully emerged in terms of the losses. So what we're doing is very straightforward. I mean, I will spend just 2 minutes on those, and I think you got it before I talk about the growth, the development part. On the solvency side, basically looking at the volatility, the sources of volatility is either coming from the cat losses, that's the typhoon, so we have the Typhoon Hato, Typhoon Mangkhut. So that's really addressing the volatility to make sure the industry understand this could be hurting. So therefore, in terms of the reinsurance management strategy, they need to understand that the Typhoon Mangkhut is only a 1 in 35-year return period typhoon. If it is a 1 in 200, which is what the RBC is pitching at, what needs to be done? So that's the volatility. The local market losses mainly stem from the employees' compensation, and the motor is amounting to systemic losses because there's a lot of losses involved. So that is really addressing to the fundamental fabric of how companies should be underwriting this business from a technical standpoint, from an internal control, corporate governance, and risk management standpoint. If we can get hold of this tool, most of the problem will be resolved, and it's being addressed now. The emerging risks come in mainly from, let's say, the health side, because on the group business is losing money. On the individual, it's still okay. Then we have the VHIS, which is also coming into the domain on the non-life side. So it's very important to make sure that the insurance market conduct the business appropriately on a sustainable basis. So we try to tackle this alongside with what's happening, which what Raymond will mention. On the growth side, very simple. If I want to paint a picture like this, we want to capitalize on the Belt and Road by constructing 2 growth engines. The growth engine will enable Hong Kong to capture the business flow to Hong Kong, through Hong Kong, being the super connector. The business flow currently goes directly from China into the countries of Belt and Road through local emitted policy, and then reinsurance is back to China. What we want to do is, by virtue of Hong Kong being a risk management center and we offer risk management capabilities, get the business to flow through Hong Kong. Growth engine number 1 is the reinsurance, and we have the equivalent assessment framework through which it makes better sense for the cedants in China to actually cede the risks to Hong Kong, because at the time when a big losses, the risk charge of Hong Kong, which is lower, will provide much less volatility pressure to the cedant if they sit to other regimes which have a higher charge. So this is growth engine number 1. Growth engine number 2 is to encourage encourage state-owned enterprise who go overseas, invest under the Belt and Road to set up a captive as a risk management platform to manage the risks arising therefrom. If we do so, the captive will basically require all those kind of risk management and reinsurance support, resulting in business flow into Hong Kong, and that create the source of business that go into the ecosystem that will address a lot of the problem, because growth is a solution to many things. There is a very strong finance angle to that because this morning we have heard like Peter Burnett from Standard Chartered Bank mention about the financing aspect of the Belt and Road project, all that lot. The common language between the financier, between the state-owned enterprises, between the contractor, between SASAC and government, between the insurance is risk management. Because if risk management can be conducted at the very beginning stage or a project planning stage, basically it helps to address to the different interests, but however the common wish of all those stakeholders in managing the risks. And if Hong Kong is providing that kind of value, that is really the added value for those growth engines to get the business into Hong Kong. It sounds long and winding, but fundamentally this is happening. So that's really the way that we want to capitalize on the opportunity arising from the mainland that will help to promote Hong Kong as a regional insurance and reinsurance hub, knowing very well that the domestic market per se is limited by size because of the way Hong Kong it is, the market, the geographical size of the population. I think that basically is a quick snapshot.
Right. We're running short of time, so I won't summarize. The third speaker is Stephen. Stephen, I don't know whether he's interesting or not, because he hasn't started yet. So he's between he's interesting or boring. I think you guys wish him to be boring, but I tell you, it might be interesting. So anyway, Stephen, can you tell us a bit about your preparation for taking over the regulation of and licensing of intermediaries?
Okay, thank you, Clement. I'm not sure whether I'm interesting or not, but I hope you'll find me at least approachable and a pleasant person. What I'm going to spend the time for the next few minutes is about an update on how we are going to take over the direct supervisions of the intermediaries in Hong Kong. So apology for those visitors coming from overseas. This is something very local. First of all, we have been spending the whole year's time in working together with the industry group in designing the new rules and regulations. So far, 5 sets of the rules have been issued for public consultation, and we have also issued a set of explanatory notes on the licensing requirement. We hope that all these can help the industry to understand what will be the proposed requirement. Before I move on, I also want to say thank you to all the working group members who have spent so much time. I just talked to one of them over the coffee break. He basically saw us every 15 days talking about all these issues. So these are the very good contributions and partnership with the industry on the development of the new rules and regulations. And at the same time, the IA has also spent our resources on developing a new automated licensing systems. Thank you for Chairman for approving this budget. This is really a lot of money has been spent. But I hope later on industry will find useful, because when we joined the IA, we found that there's no way we'll be able to continue to handle all these licensing applications still on the paper forms. There are more than 100,000 agents or workers out there. So we must automate all our licensing process. So with all these new systems, we hope that when all the data have been captured, then the time spent on updating the information, approving this information, and processing this information by the IA can be reduced. So that would be a win-win-win situation, because the agent saves the time, the insurance company also can save the time in processing and approving all these applications. Same for IA, we can just straightforward processing all these applications. So we hope that with these 2 initiatives, we'll be able to help the industry to overcome the transition period. Now come to next year. I have just told you what we have done this year. Next year is more important for us because I call it next year will be the year of engagement. Why is that? Is we need to engage with the industry on implementing all these changes. We all know that no one likes changes. Everyone will be very uneasy about change. There's always fear. And since this is the IA, we initiate the change. We put on all new requirements. So I will take the initiative to go out, talk to every one of you, to engage with the industry, to explain about all the requirements, so that you fully understand about the objectives and the requirements. Very honestly, based on my past working experience, many people out there want to be a good corporate citizens. You just need to tell them what are the requirements, how high is the post, they will follow, they will comply with it. So we will offer to the industries that we will do more town hall sharing. In fact, we did in last month with one of the broker association, and we will do 2 rounds of the licensing briefing in January. So if there's anything you think we can help you to explain about our work done, please let us know. I'm quite happy to offer my staff to talk to you on all these new requirements. On top of these town hall briefings, we will continue to issue a lot of circulars, FAQs, and also reports. For example, we issue a AML, anti-money laundering inspection report, basically without quoting the names, but summarizing some of the key issues noted when we evaluate and assess the AML practices of the insurers. The whole idea of issuing this report is to let the firms to benchmark your own practices against others' practices, so that you know which areas you may be able to do more to help you to catch up the latest international requirements. So all this continuous engagement work will be continued in the next, at least first half of the year. On top of that, we will do our UAT test on the licensing systems in the first quarter of next year. Some firms have already volunteered to join us to do this industry-wide UAT. For anyone who are interested in doing so, feel free, put up your name. Definitely, we want more people to join so that we can test the system, make sure it is functionable before we roll it out. So this is the first level of engagement, is engagement with the industry. The next level of engagement will be engagement with all our self-regulated bodies, because right now Hong Kong is still operate under the SRO system in terms of the intermediary supervisions. And we have already set up different working groups working together with the SRO, the 3 SROs, talking about the transfer of the cases, transfer of the data. Once we know more about when all these when is the D-Day, when all these data and outstanding cases can be transferred, we will definitely let the industry knows about it. And also, rest be assured, even though at the D-Day, when there's some outstanding cases, we will take it over, IA, but we will use the prevailing standards in assessing, in also addressing all these outstanding cases. So this will be the second key point, is about the engagement of the SROs. The final engagement is the engagement with the public, and also engagement with a number of the services provider. Although sitting here mainly will be the industry peoples, so we are focusing on how industry to do more. But don't forget, outside this room, there are about 7 million people here. These are the potential or the existing policy holders. How we can educate them, how we can reach out to them is very important. The reason is I'm also dealing with all the complaints filed with the IA. When I look at it, I understand to a certain extent some of these complaints filed is just because the policy holders do not understand the extent or the limitations of all these policy protections. So the more education we do, the more reach out we do, in fact, would be a way to help the industry to develop further. And then I just want to mention another point is about our engagement with service providers. The reason why I mention it, because when I gave a talk, which is a Chinese-speaking talk, I saw an English-speaking attendee sitting there. Naturally, he doesn't know what I'm talking about. And fully understand he sit there just because he want to have 3 hours of CBDs, continuing professional development. I raise this point is because this is really dear to my heart. As a regulator, how many hours of CBT the market participant attend is not important. 10 hours, 11 hours, 15 hours is not important. But rather, if the cost of these CBDs is not relevant, it's not helpful you to enhance your knowledge, to help the market practitioners to help to explain all these causes, all these terms to the customers. This is a failure. So to me, I will regard once when all these rules and regulations have been done, settled down, the next challenge for us is how to work together with the SROs, with the industries, with all these courses providers to make all our CBD requirements are relevant, useful, so that your agents will be interested in attending it rather than coming here just want to have a 3 hours or 6 hour free CBDs. So in the conclusion, probably I have spoken too much. I would say that what we have done so far is trying to raise the standard of our insurance intermediaries. But you will see that, in particular, seeing from all the proposals we put out, our approach is a very pragmatic approach, and we give a long transition period to our industry to move on because we want to have an orderly and a good transition from the current regime to the real regimes. So hopefully, by working together with the industries, we will get and improve the Hong Kong standard as a whole. Thank you.
Okay, just to rest your fear, I think I emphasize 2 points. First, Stephen's schedule is new. We haven't taken it on. Nobody in Hong Kong has taken this on before. But there's only one word which is important for this scheme to be successful, which is trust. Now, trust has two sides. Trust because insurance is a trade that can only be sustainable by trust of policyholders, by trust of the public on the insurance community. So a credible and robust regulatory scheme is essential to maintaining that trust. So it's the very basis of the insurance business. Second is the trust between the regulated and the regulator. So you must trust us that we will calibrate our scheme correctly, and even if things eventually don't work out as we planned, there is always an open door and forum like this that we will face the industry and listen. The second point I wish to emphasize is that we can focus so much on drafting or guidelines and everything, but the important thing is on enforcement as well. So I know a lot of people did a lot of research on the structure of our ordinance. They did research on our individual people, where they come from, but I can tell you only one thing, that we will enforce the IA's regulatory scheme the IA way. We will do our own regulation according to circumstances. This I can pledge to you. Okay, so next year, in the middle of next year, we'll have the new scheme, and this scheme is, again, very organic. So we look to you to try to tell us how the scheme is working. And if you don't believe, I can tell you that 2 days from now, me and one of our board members is going to be attending a meeting of the Insurance Concern Group, and 400 agents are going to say hello to us. So I think that's the kind of engagement you're talking about. So we have no fear, and that is the way we're going to approach this scheme. Finally, we come to Raymond. I tell you, this is certainly not interesting. Now, in IA, when we want to test whether your joke is funny, we all turn to Raymond and see his reaction. So now Raymond is going to tell you the hard stuff. Okay, he's going to tell you RBC, the PBS, and all these and surveyor protection gap, and a number of other infrastructure projects that he's handling. Raymond, please, and don't laugh.
Well, first of all, I'll talk about the RBC. I mean, if you look around in Asia, actually most jurisdictions are still using factor-based, or what we call the Solvency I. A few have moved on to partially risk-based, which is based on a few key risks, what they call the RBC1. And China, they adopted C-ROSS, which is basically what we call the RBC2. It's fully risk-based. And Hong Kong at the moment is factor-based, so we will be leapfrogging directly to the fully risk-based approach. The RBC solvency regime based on the three-pillar approach. This morning, I think PC mentioned that he believed that this RBC regime would help the sustainable growth of the insurance industry. And I couldn't disagree. Well, I mean, I couldn't agree more with that, And I can sort of briefly describe the RBC regime in a few minutes, actually. Pillar 1, which concerns the solvency requirement, is fully matched to the underlying risk undertaken on by the insurance companies. So it's in direct proportion to the risk. So what it means is insurance company can actually achieve a more optimal deployment of capital to support the insurance business, which is actually taking on the risk. So that is the one of the major benefits of the RBC regime. Apart from that, we have the Pillar 2. Pillar 2 is the enterprise risk management framework, or in short, YAM. And with the, and they produce annually what we call the ORSA report, is the Own Risk and Solvency Assessment Report. What that means is it would require the insurance company to have a full risk management framework adopted, which would help them actually to better manage the risk. And for those companies who have good ELM framework, actually it will produce good solvency results. And actually, they can, through this Pillar 2, they can understand the risk, they can better manage the risk. For example, they can use that to optimize the ALM, particularly for life insurance companies. They can optimize what we call the SAA, strategic asset allocation, so that it can achieve the major objective of the companies to, for example, maintain the solvency within a certain range or not below certain minimum threshold, and also minimize the volatility in the earnings. So actually, it improves the earnings, because lower volatility in the earnings as well as solvency ratio, which in turn, actually, if it's a listed company, it has a rating, it improves its external credit rating. And also through this new RBC regime, it produces, it would have a more solid foundation for the long-term growth of the insurance industry. So that applies to both life and non-life companies. And actually, I mean, thinking back in Hong Kong, the OCI actually was established in 1990. And the existing factor-based Solvency I, the legislation was passed, I think it was September 1995. So it's 5 years, because I did this, so I remember. And now I rejoined the Insurance Authority, only last year. We actually have a more aggressive timetable, because we last year we rolled out the quiz 1, and then, and then we have the quiz 2 results. This year we just received, and next year we're going to roll out the quiz 3 template, and then we'll produce the draft rules, and that means we will have the legislation, or the draft legislation, in 2021. So that gave me only 4 years. So we have a very aggressive timetable, and hopefully we can achieve this within the timetable to a full implementation in 2022, of course, with sufficiently long transitional period. And the other thing I want to mention is protection gap. In fact, this protection gap, we are actually have underway a protection gap study. We believe that this protection gap study would achieve dual purposes. Apart from helping to educate the general public about the insurance needs, it also creates business opportunities for the insurance companies. I'm happy that Yoshi mentioned this protection gap, which is actually is a global phenomenon. Actually, it is one of the top priority of the World Bank, to promote the use of insurance to narrow the protection gap. And this morning, actually, Gordon Watson also mentioned a figure, 500 billion, if I believe, I remember right. And I think he probably mentioned that in terms of euro instead of Hong Kong dollars, because our preliminary estimate that the protection gap in Hong Kong is around 6 trillion Hong Kong dollars. So it's a big number, but if you divide that by the population of 7.5 million, we translate to a protection gap of less than 1 million Hong Kong per capita. So if you compare to, the mortgage you take out, the flat that, in Hong Kong, an average flat is more than 1 million US dollar. So 1 million per capita, not a big number. And for those who have children who go through school, I mean, you know how expensive it is, for education. So, but $6 trillion doesn't mean anything to, people on the street. So we're going to translate that into specific examples that fits different, sort of typical people, and so that they would understand how, what it means to them, the protection gap. So we'll be working with the Investor Education Center, as well as Consumer Council and also the insurance industry, to promote this, protection gap. And actually, one of the main reasons for sort of this protection gap or underinsurance is because of behavioral economics. It's just people are risk averse in a sense that they see paying $1 of premium as a loss. So according to the, I think the Nobel Prize winner is, $1 of gain is equivalent to $2, well actually $1 of loss equate to $2 of gain. So they need to be precise, actually it's 2.25, okay, according to the paper. So that's why they're not willing to part with the $1 of premium. The other thing is the discount sort of event which is remote in the future, which is the probability of death. That's why they, particularly for Chinese, they are so confident. And another thing is they are overconfident in themselves and thinking that, I live healthily, I eat healthily, then I can reduce my probability of death. And actually, there's one guy who's a genius in insurance. His name is C.V. Starr. And he started the American Asiatic Underwriters in 1919 in Shanghai. And then he started Alico in 1921. The reason why he started Alico, because he found that the insurance companies in Shanghai, well, there are quite a few of them. They're all foreign life insurance companies, only sold life insurance to the expatriates. They don't sell it to Chinese. They think that they're too risky. So with Alico, then very soon he found that it's difficult to sell to local Chinese. But he's a genius. He came up with the idea of money-back insurance policy. It is what we call the anticipated endowment. Basically, you receive a coupon once every 2-3 years. And that is still very popular, I think, in Asia. I think, and today, actually, I think some of the digital insurers are actually using behavioral economics and coupled with insurtech to sell life insurance. But I think, it's a long road because it takes time and patience to develop the digital distribution channel. But I think in Asia, particularly in Asia, we can actually deploy behavioral economics and insurtech to the agency force and the brokerage. Actually, there are already success stories in the Western world, so I believe that that would be very suitable for the Asian market. And the last point is about, I would propose that for the Asian insurers, apart from the Hong Kong insurers, to use Hong Kong as sort of the sandbox. It's just because for most insurance companies here, actually, they don't need the required pre-approval of insurance product. So they can use Hong Kong as a sandbox to test out new ideas and before they roll it up to the other Asian market.
So thank you, Raymond. Now, we have about 15 minutes for questions, and you can see, if you talk long enough with Raymond, he could be quite interesting. Anyway, I'll begin with some of these questions. I think the first one, is really relevant because it's really from the SROs. It said, what would be the roles of the 3 SROs be after IA's taking over of the regulation of intermediaries and their interaction, cooperation with the IA? Please.
The SRO definitely can play a very important role in serving their members. And one of the major roles, in fact, that has been mentioned by me earlier is provide quality CPD courses to their members. So that in our proposed CPD guideline, we already mentioned that the SROs can directly come to IA seeking approval for their courses without going to other authorizing authorities. So we look forward to working together with the 3 SROs on working on this, because this is the relevant CPD courses is something dear to my heart.
Okay. Well, I'll give more chances to different questions, right, than just to make more people to comment on it. The second one is, one of the things that market practitioners, there's people in the audience, can do to help us close the protection gap. Does the IA has any direction on this? I think it's good for everybody.
Let me start. Protection gap has a relevancy in non-life. That really comes into what I talk about, the typhoon exposure. When you look at how much losses are being covered by insurance under insured loss versus economic loss. So I just want to highlight one point. It's very important for the regulator like ourselves to work together with the industry to promote the understanding of taking out appropriate insurance protection to cover against especially natural catastrophe. So there's definitely an important dimension in that.
Any comment from Carol? Because Simon's mainly on the non-life side.
Yes, sure. Regarding the lifestyle, in fact, I just mentioned about the two initiatives to promote this providing tax incentive to encourage our insurance public to take out more protection-based product like annuity, be it deferred annuity or life annuity, as well as these voluntary, the health products, the medical products. So, I mean, these are the initiatives that we are currently working on. We will expect that will become fruitful next year, and definitely we'll continue to work on sort of to shaping the structure of the life insurance market. I mentioned about the InsurTech. With the newcomers, be it under the fast track or our existing life insurance using the digital channel, we are expecting, you know, the selling of this simple fragment products on the net will have, with heavy protection element, we also have to fill the gap of this protection gap.
Okay.
Allow me to highlight one more point is on the ILS, since there's a lot of interest generated on ILS. If you look at on a national government, national level, for municipality or national government, the sort of economic losses that actually come under insurance, you see there's a big gap. There's a very strong room for actually for disaster relief, disaster mitigation to be actually addressed through, you know, ILS, and that is something fundamental in terms of addressing the protection gap on a national level. That is a very important point, and I hope it also underscores the importance of having ILS on the agenda as a growth initiative for the IA.
Okay, one more point. Obviously, a lot of people in the insurance intermediary trade is really concerned about InsurTech. The question is worded like, digital insurers do not use intermediaries for distributing their products. Do you foresee any changes in the role of them in the near future? Anybody? Okay, they have no answer. I think they're doing it deliberately to ask me to speak. Well, I think first of all, the premise of the question is that digital insurance is going to dominate the market. I don't think so. As I emphasized before, the insurance market is built on trust. It's really a question of how to ensure InsurTech complements the development of a traditional insurance market. I, for one, will not believe that somebody will go, or even I would not believe that a regulator will allow a digital insurer to sell a high quantum insurance product to anybody. And secondly, for products which involves a very complicated structure or that involves a very complicated underwriting process, I think naturally something which complements and support a digital way of selling is important. So pure digital insurer is one end of the spectrum. Traditional insurers using pure agency or broker for delivery is another. But there are a lot of in between. There will be a lot of hybrid cases. There will be, in fact, agents using InsurTech to support the selling process. So as I said many times before, InsurTech and FinTech is not really about replacement. It's about supporting and complementing. So my advice to all the intermediaries is that instead of seeing it as an adversary, you should look at how FinTech and InsurTech, in fact, can strengthen your value to your customer. And as a regulator, I can tell you that when it comes to a moment when the market is under stress or we do have a crisis, nothing can restore and preserve confidence more than a face-to-face relationship. So this is as much as I can offer from a regulatory point of view.
If I may, if I try to wear the head of a market practitioner, the market needs diversity. The digital channel actually is a function of, you know, a couple of things. First of all, it defines, it actually, the product. It's not every product that you can sell through the digital. As already Clement mentioned, you know, there's a very strong client-facing consultative element in selling some of those products which cannot be sold on digital platform. Secondly, you have also changed in purchasing the behavior in different customer segments that might require different things. So what we try to promote is actually the positive diversity to the market. It's a choices. It's the choice that is available to the customer, depends on what is suitable for them. We have an important role to ensure that the products, the channel, the way that is the sales process are being used is actually commensurate with this channel. I think this is what we want to look at for sure. There is in parallel a process that's happening is the digitalization of the sales process, even in the case of intermediary, which Clement already mentioned. So if we try to look at it this way, what we are seeing is actually increasing diversity to the benefit of the customer, to the market, but under an appropriate prudential supervision framework that will ensure that everyone would have a right place to play, right role to play.
Okay, I have one question which just came in, very provocative. I'm not sure which one wrote this question. Certainly it's not me. How will IA work harmoniously with HAMA, SFC, and MPFA? Is there a risk of regulatory fragmentation in Hong Kong if boundaries and ownership rights are not clear? Stephen, you must answer this. You came from the SFC. Am I doing the right thing? Oh.
Thanks for giving me the opportunity. Anyway, for those who attend the breakout session this morning, you will find a very good example that we invite the regulators from Hong Kong MA, from MPFA, and also from SFC sitting together to share their regulatory experiences, their objectives together. And in fact, in that breakout section, my key message to the audience is that the financial market is interconnected. For example, many of our life and general insurance products are nowadays sold by banks, which are regulated by Hong Kong MA. And many of the MPA products are sold by our insurance agents. And we, as the frontline regulators of the insurance agents, have to investigate all these cases. And finally, for one type of the insurance product, the investment-linked insurance product, the ILAs, because it is a securities by nature, it needs to be approved by SFC. So even right now, there's already very close connection among all these regulators, because when we see the things, in fact, all these certain extent are leaving aside the general insurance, but talking about a lot of the life insurance products, many are the financial products to some extent. So it is very important, one, for all the financial regulators to talk and share their experiences and in particular the objective. And that mainly done through the Council of Financial Regulators, where Clement will attend on behalf of the IA. This is a council meeting chaired by FS to coordinate the overall regulatory aspects of all the regulators in Hong Kong. And secondly, on the working levels, each of the agencies will have our MOU put in place. And more importantly, is the staff, working level staff, know each other's, pick up the phone, talk, and resolve the issues. So in the end, it is a fact of life that the market is to a certain extent divided into different sections. But the key thing is that we all work together to make it as a one piece.
Okay, Carol, you have something to say as well?
Just want to supplement. In fact, Stephen has this is the answer to our FSAP assessor, financial sector assessment. Assessors, when come in, this is definitely the question that they will ask. How would the regulators cooperate among each other and ensure, because of this cross-sector products issues or some of the common, like the conduct issues among the, in fact, the four regulators. So Stephen mentioned about this Council of Financial Regulator, definitely, chaired by the Financial Secretary. And we also have the Financial Stability Committee, chaired by our Secretary of the Financial Services. On top of it, Stephen mentioned about this pick up the phone and at working level collaboration. I just wish to emphasize this collaboration exists between us and the Hong Kong MA. We also, on top of this telephone exchange, we have regular meetings on prudential supervisions of those bank assurance, that had the groups that have bank, be it branches or subsidiaries, as well as the insurance branches or subsidiaries. So we exchange on a regular basis. SFC, we definitely, Stephen mentioned about investment-linked products, be it the last few years about the, what we call, SFC is responsible for approving the investment-linked products, but the IA is responsible for reviewing the products to ensure its compliance with our Guideline 15. So the cooperation, we have already established what we call organic cooperation, 3 weeks, they review to us, and then, so the industry is accustomed to all this, and it works so well that, this kind of cooperation continue. Our cooperation with the MPFA, we also have regular meetings with the MPFA, be it on the selling of the products by our life insurers, or on some common issues like the restructuring of our entity, which also relate to the MPFA. So this kind, I just want to emphasize, we have the Council of Financial Regulator, we have the Financial Stability Committee, and then below we have this regular liaison meeting with the other 3 regulators, and on top of it, our working level and even between me and the director of the Hong Kong MA, SFC, and the MPFA, we have very close coordination and collaboration of the common industry issues.
And on a lighter note, this morning you heard about the Hong Kong MA, the IFO, that's for the Belt and Road. There's a very strong collaboration between the IFO, which want to cultivate, supporting the financing aspect of Belt and Road projects through Hong Kong as a hub for financing, and also the brief that we just set up. So there's a strong alignment in cooperation. And the key thing is, when it comes to this part, is the risk management, because both need to adopt this point in terms of getting those projects in place. And in future, when we do the iOS, definitely there's a strong angle of cooperation together with the SFC. So what I want to highlight is, obviously, from regulatory angle, from, development angle, there's always this cooperation. There's always to do with, when you say about cooperation, basically it's alignment of common purpose. Because if we have alignment in terms of what needs to be done, then colleagues already mentioned, it's a matter of, getting the working level, pick up the phone, get things sorted out, really from the perspective of getting things done. I think that's really what I would like to add.
Okay. First, it's in our interest to work harmoniously as a regulator, because otherwise we'll invite arbitrage. Okay, so it doesn't work for us. We will only have ourselves to blame. We end up having a market that opens that particular risk. Secondly, we have to liaise with a lot of regulators because we want to have a level playing field. I can tell you that on the desk there's already one case where there is a situation whereby there's a perceived uneven level playing field between different regulatory regimes, and this is something which I have to address personally. And finally, with the formation of the IA, there's one thing probably you haven't noticed, but it's in our DNA, is that we join people from everywhere. So our team of staff, 2/3 are from outside, and a lot of them, in fact, came from HMA, SFC, and MPFA. Now, they provide a natural linkage because they have working experience, they have their own connections. I think that, to a certain extent, is also a very pragmatic way of ensuring that there's a proper linkage and ensuring that we can work together as a team for the benefit of the insuring and investing public in Hong Kong. The red light is blinking, so I don't see any burning questions here, so maybe I should just get the benefit of time and wrap up. Now, I can't thank enough for everybody. Those who are gone in the morning, I know some of you came in for the afternoon just to savor this. I'm very grateful. You don't realize how important this is. This is a flagship event. This is an event that we, because of the response and reception we've got today, I'm sure that we all want to have this again next year. But in order for us to do better, I wish to remind and encourage and implore upon you to fill in your feedbacks through the portal by scanning the QR code. That portal will be open until 9 p.m. tonight. Tell us about the contents, the format, the style, whatever that you like or don't like, because that will help us shape this particular event for next year. And then remember, once we fix the date, pencil in your diary. We will try to accommodate more people next time. And apart from all these, there's one very important point which this event brings about. Not everybody would know that in the IA, we actually operate more in a sort of private enterprise manner. We have a board, we have a chairman, we are all accountable to the board. We do have a corporate planning process where we have to draw up a 6-year strategy from which we will elucidate our vision. We will draw up performance indicators. We will also be drafting our budget, allocate our resources accordingly. In that process, we wish to draw in as much as possible input from both our staff, of course, and the wider industry. This is one of those occasions where we can pick up very valuable intelligence, messages, cautions, advices that we can factor into there. Since we're so new, I'm still in deliberations as to how we can actually get this process of planning more open and more inclusive. So this event is not just about seeing us and listening to all these opportunities and challenges. It's also for you to tell the IA what you think as an issue which is dear to your heart, which you feel that IA must factor into its midterm strategy. And for that, I thank you again for coming. And I also have to perhaps ask you to join me in thanking for all my staff, whom you probably don't notice, and the event organizer for putting this flawless arrangement. For a first-timer, all of us have never organized anything like this. I think we have done a very daring and a really, I think, worthwhile endeavor. Let's join everybody in thanking our staff and the organizers and everybody at the HKCEC. And I will see you guys again next year.
Thank you. Once again, thank you, the Chief Executive Officer of Insurance Authority, Mr. Clement Cheung, and also all executive directors. Thank you so much. Please be seated off stage. Thank you.